Good afternoon, everybody. Thank you so much for the opportunity to be with you here today. And I'd like to take the opportunity to introduce the members of the Monetary Policy Committee. By name, it's in front of them, so you'll know who they all are. But this is the team that actually works on the monetary policy decisions, and I'm very proud to be part of that. I'd also like to perhaps outline the approach today. I'm taking a slightly different approach to the way it's been done in the past. First of all, I would like to talk to some of the issues that we discussed. So I will highlight some of the matters that the Monetary Policy Committee has spent 1.5 days on. Then, once I'm finished with that, we will distribute the statement that, in essence, will contain as well our decision, and then open for questions and answers. And thereafter, if anybody does want to, during this process, ask any questions, please use the microphones because it does enable the webcast to function better. So that's the framework that we're going to operate on today. I also want to spend a little more time than one would normally do on the global issues, because I think what's happening in the world today is extremely important to both the options that we have as a country and the impact on us. We operate in a very different environment. In essence, what we have experienced and are hopefully turning bottom of is a Great Recession. I think we've narrowly avoided a Great Depression, and that was due to unprecedented coordinated action by fiscal and monetary authorities throughout the world. But the conditions remain very serious. And we've seen ballooning budget deficits across the globe, a soaring debt-GDP ratios, and rising unemployment. Global imbalances, excess liquidity with huge capital flows, seeking returns are flowing to emerging markets in many parts of the world. The changed context in which South Africa operates creates enormous challenges for fiscal and monetary policy and requires a cooperative approach. As I'm sure you're all aware, and certainly we are, there have been discussions about engagement of the framework that we operate in, of the challenges that we face, and we welcome that engagement. We look forward to building on the engagement that has been between, and the interactions that there have been between the SARB and the National Treasury and the Minister of Finance. The Minister of Finance and I have been in discussions, and we'll be working a process forward about how to look at this environment and what the changing circumstances require of us in the best interests of the South African economy as a whole, the people of this country, and that ensures that both the South African Reserve Bank is able to do the job that it's set out to do. So we welcome that opportunity and look forward to that. In essence, we need to take a global view of the systemic risk that the world faces. This is a very different recession. It's been a synchronized global recession. There's been a major asset price bust and a credit bubble. We've got a 1 in 100 year credit crunch. And in many parts of the developed world, we've seen a very dysfunctional banking system. The systemic risk is of great concern. And if you look at the global fiscal deficit growth, for instance, Ireland is at 12%. The United States is just under 10%. It's risen from 3%. And we ourselves have adopted a counter-cyclical approach and are working to, or have agreed that, if you looked at the medium-term budget policy statement of the Minister, that we would have a budget deficit of 7.6%. Measures taken regarding the banking system globally, which looks at the regulatory environment, looks at a focus on consolidated supervision and on counter-cyclicality, on increased capital buffers, on liquidity, on simpler group structures. But the essence of all of these measures, and I think it's very important that the SARB, which is responsible for the regulation of banks, recognizes that the real task that we all face is to strengthen the entire system. It's to adopt policies that reduce the consequences of failure to society, and that means it's essential to enhance the robustness of the system as a whole. That includes your payment system, the exchanges, the regulatory environment, the transparency of data. All of these things are important in doing that. Also, we need to remember that in the end, regulators do not run the institutions. They're there to create a framework, to create ratios, to create transparency. But we need to reach a point where a failure of an institution can happen without it becoming a failure of regulation. And that's a long way away from where we are now. But that is the work that needs to be done regarding the banking system and getting it back on track. I'd also like to look at perhaps 3 countries globally: the United States, the United Kingdom, and China, before I turn to South Africa. If you look at the United States, growth has returned to just about 3%, and the outlook that they predict is certainly a rising growth. But they've also seen a very sharp reduction of employment. Employment in the United States stands at 10.2% on a narrow definition, as much as 17 or 18% on a broader definition, and this is expected that it could rise as high as 11% next year. Productivity is up, but jobless growth is foreseen. The capital markets are improving. Bank lending continues to contract, with a very significant impact on small business, as well as a lack of credit. And this, of course, in the United States, small business is a very significant part of job creation, and therefore what happens to small business and the granting of credit will impact on job creation. There's a deflationary trend, although slightly easing. It has been at minus 1.5% in August and up to negative 1.3% in September. And the Fed fund rate has been kept at between 0 and 0.25%, extremely low, and in their own words, seeing that being sustained for the foreseeable future. What are the concerns for the United States? And of course the United States matters because it is the biggest economy in the world, and therefore what is happening there affects the rest of the world. There are 5 reasons to be concerned about the outlook. First of all, there's a beleaguered United States consumer. Wages are compressed, there's a poor labor market, wealth is being reduced, and credit is constrained. There's a largely dysfunctional banking system still, with major loan losses still likely to be recognized, and they have yet to resume lending. Commercial real estate, there's a large amount of loans falling due, and there's a concern at that outlook. Possible further declines in home prices, although this seems to be stabilizing. And there's a weak global economy that is being hurt by a weakening US dollar. If we had to look at the United States, there's some similarities and some differences with the US. If we had to look at the United Kingdom, growth is negative there. These are some of the differences with the US. It's still at negative 1.6 in the 3rd quarter, but there are positive signs, and they're seeing that much more positively going forward. The housing market has risen for some 6 months, but the UK and Europe are seeing labour hoarding. In essence, if they're acting in a pro-cyclical manner, unlike the United States, and they are not seeing job losses. The UK labour market is extremely flexible. 2/3 of wage settlements in this period have been at 0, and output is down by 6%, but employment is not falling, and therefore there's a concern that as this continues, they may well see labour falling as a lag to what is happening now. Some of the similarities: there's a reduction in credit supplies through the banking sector, especially for small business. Very sharp monetary squeeze is evident. Enormous uncertainty prevails, and they're going through a major rebalancing. They're moving away from consumers to exports and fiscal consolidation. In essence, the outlook for the UK is very dependent on what happens elsewhere in the globe. China has become South Africa's major trading partner. Their exports have contracted by up to 25%, and this has been substituted by internal demand. Consumer consumption grew by 16%, and there's a lot of focus on urbanization and infrastructure to support that, and in essence they've seen a 30% growth in domestic investment. Therefore, their outlook is much more optimistic. While they had a dip in growth, they're back at over 8%, and they anticipate that growing up to even 9% next year. And they're only running a fiscal deficit of about 3%. So if we take that context of what is happening in the globe, let us look at some of the things we discussed as well in terms of the domestic market developments. We've seen a very significant increase in bond issuance in the domestic bond markets, but we are not seeing a crowding out effect. The recovery in risk appetite for South African bonds by non-residents, combined with equity inflows, has provided very strong support for the rand, and we've seen around 100 billion rand inflow into South Africa. The foreign exchange rate of the rand is of concern. It reflects the global imbalances that I was talking about earlier, but it also shows a decline in global risk aversion. The South African banking sector has not been part of a systemic banking failure. In fact, our banks are extremely well capitalized, well above regulatory requirements in terms of Basel as well as international norms. The financial leverage of our institutions is very low compared to the global norm. And what we are seeing is credit extension contraction and a deceleration in M3 growth, which reflects the weak economic conditions that prevail. Impaired advances are still increasing, though it's at a somewhat slower pace. And in total impairments, total impaired advances, in fact, doubled from a year ago. We're seeing a decline on return on assets and return on equity, but the banks are still well profitable. In essence, the systemic banking crisis that has been seen in many parts of the globe has not been the South African experience. The South African banking system is experiencing what would normally be experienced in a recessionary period. In terms of the domestic real economy, what we discussed was that the data on growth is going to be released soon. I think it's due next week. And the forecasts vary wildly from a real GDP contraction at a slower pace in the third quarter to a robust recovery. The outlook is much more positive from 2010 and beyond. Real output remains below output potential. Manufacturing has improved, but we've seen a weaker mining sector. Indicators show possible improvement in real economic activity in the near term. We've seen significant employment losses, and consumption expenditure appears relatively weak, which is indications of higher household debt, negative wealth effects, and concerns about job security. So those are the conditions that we are seeing in the real economy. Our outlook for inflation, the global environment remains benign from an inflation perspective, and there are no significant risks to the global inflation outlook from the international community. The main risks to the domestic inflation outlook emanate from uncertainty regarding the quantum of the electricity price increases and the possible second-round effects thereof. The risks to the inflation forecast remain relatively evenly balanced. Having had those conversations, and again I've used that, you will get the statement in a minute, I've used that to give you an indication of the extent to which we've had conversation, the depth of our discussions, all the issues that we've taken into account in our consideration. And as a result of all of those discussions, the decision of the Monetary Policy Committee is that we have decided to keep the rate unchanged at 7%. I would now like to open the floor for any questions, and Sam, please ensure that everybody does have a copy of the statement. On the statement, you will also find the schedule of next year's meetings. What we have decided is that the reasons, and it sets that out, the reasons for having a monthly meeting was for this year, 2009, and therefore from next year we will be going to a meeting once every 2 months, with the proviso that should any conditions change that warrant a meeting to be held, we will without hesitation do that and notify all of you with good advance notice. So that's our statement for today, and I'd like to open it to any questions. And if I could ask you to identify yourselves.
Thank you. Mariam Issa from Business Day. I haven't had a chance to look at your statement closely, but I wondered whether you all still see inflation returning to the target on a sustainable basis by the second quarter of next year. And I'm also curious to know why you haven't factored in yet any higher than baseline forecast for the Eskom price increases.
Perhaps the question of, well, because it's uncertain. Obviously, we factored in the 25% that has been agreed. We've indicated, and it is of major concern as to why the position we've taken on the stance is because we are uncertain as to what it would be. So we've looked at various scenarios to what the impact could be, and our concern is not only the actual price increase, the period in which the price increase takes effect, but also the second round effects. So we've looked at scenarios, but at this point in time, we've only factored in the 25% that has been agreed. The second question about inflation to target, yes, I think that it is, and it will be in the monetary policy review, that we see it hovering around the 6% with evenly balanced risks. There's as much upside as downside risk, and therefore that is the approach that we are taking, that it will be within a very likely to come with below the 5%, the 6% for a very short period of time, perhaps rise a little bit above, depending on what happens with electricity prices, and be sustainable going into 2010 around the level of 6%, perhaps slightly within. Yes, sir.
Alain Dedi, SABC, University of Johannesburg. My congratulations, Governor. You have been appointed Governor of the Reserve Bank.
A whole week.
Yeah. And this is you are a political appointee, and you are leading an institution that is the Reserve Bank. How are you going to balance between the independence of the bank on one side, and the other side, the fact that you are a political appointee, the pressure coming from politicians? You know, the previous governor used to be trying to juggle between these two angles. I'm asking, how are you going to deal with that? This is my first concern. The second one is, you hear the latest release of the ANC tripartite alliance during the weekend, in which they were telling that the bank, the monetary policy must integrate the issue of job creation in its policy. Are you going to change the mission statement of the bank, or how are you going to integrate that aspect in the main mission of the bank? That we all know that you may go to the website and read that mission. And we know that there is a decree coming from the Parliament. Are you going to go back to the Parliament in order to integrate that aspect of job creation in the main function of the bank?
Are we going to go back to? I didn't catch the word.
Parliament.
Okay.
Sorry.
Okay.
Thank you.
Perhaps to respond to your first question, every central bank governor that I am aware of was appointed by the president. It is, in that sense, a political appointment. It is not a political appointment in terms of saying you are in this position and therefore as a political appointee holding these offices, we're putting you in the bank. So it is an appointment by the president, and I hope and trust that it has the confidence of the people of this country, all the people of this country, because the institution is a unique institution. Its responsibility is to all South Africans and to act in the best interests of all South Africans. I do not see it as a political appointment that I am bound to anybody politically. The job that I have, I hold no political office, and the job that I have is to do the best in terms of what is required for all South Africans in keeping with the mandate and purpose of a central bank. So I do not see this as a political appointment or as having any conflict in relation to that appointment. The second question, which is what happens after the Alliance. The Alliance Summit said there needed to be discussion about the mandate of the Reserve Bank. They have created a task team. We from the bank are very happy to engage on the issues, because as you've seen around the world right now, the whole purpose and functioning of a central bank, of national treasuries, is being questioned in terms of the challenges that countries face. That's why I spent time at the start of this meeting to give a context to the framework in which the central bank operates. It is not the same as it was before. It is our responsibility to see how a central bank can meet the challenges of the time. And that's a very important task. This isn't about kowtowing to anybody or an Alliance Summit saying that, we will change the mandate. It's an engagement about what are the challenges we face as a country. What is it that you have as an institutional responsibility with the resource that you have as a central bank? And your task, because the role of a central bank is one element a very important element in a society. But how we tackle all the issues that a country faces is a national task. And that's why it's a cooperative effort. But it is not something that one looks at in isolation and say, you've now got this question. For us, it's about an engagement. Monetary policy is an evolving process. You know, if you look at it today, it's inflation targeting. Inflation targeting is a tool. Before you had money supply. You've got different tools by which you need to effect and give effect to your task, which is how do we keep inflation at bay. So yes, we are very ready and willing to engage in the discussions. And our counterparty is the National Treasury and the Minister of Finance, and that is who the vehicle through which we will interact, as well as our own engagement with a wide range of people from society. Let me see if there's anyone on that side. Yeah. I'll come that way.
Hi, Vernon Vessels of Bloomberg News. Was today's decision a unanimous one? Did the MPC discuss a rate cut, and if so, perhaps how much? And is there still room for the MPC to cut interest rates in coming months, or did the committee see this door as closed for now?
Vernon, you're asking us to tell you what we would discuss in the future about a rate. I think that's not really where we're going to go, is it? Okay? The essence of it is that the pros and cons, or the upsides and downside risks, are evenly balanced, and it depends what happens, that will determine the decision we take in the future. The decision on this was unanimous. We certainly, when we discuss, it's a very full, frank, and robust discussion. And a lot of it relates to, and as I've said in the closing statement, what were the upside risks? There's big uncertainties. There's big uncertainty around the whole question of what will happen with Eskom. And therefore, this is something that I think all members of the Monetary Policy Committee were clear that there were too many uncertainties for us to take a different approach at this point in time. Yeah.
Candy from Summit TV. Just to go back on to his question, do you believe that the mandate for the bank should change? Should we stick to inflation targeting? And are you worried about the strength of the rand? Are we likely to see the bank sort of being a little more active in trying to weaken the rand?
To start with your second question, look, the question of an appreciating currency has benefits and negatives. And if you look at the world, the whole world, whether it's Russia looking at the ruble or Chile or Brazil, countries are looking at what this massive inflow means for an appreciating currency. The central bank does not intervene in the markets to achieve a level of what your exchange rate should be. That must be absolutely clear. There is no such thing that the central bank, and I think the lessons learned about those who do want to go for a particular level have been to their detriment. So there's no way that the central bank will intervene to look and target a particular exchange rate. That's inappropriate. In terms of whether the mandate should change, I think that what we are saying is that this is a subject that there are concerns about in society, and we welcome a discussion about those concerns. The impact that will have on the mandate or what the approach would be, we will have a view. We will engage with those those who have concerns genuinely about their concerns, listen to them, and see what we actually achieve. The mandate of a central bank, in essence, whether it's explicit or implicit, we have an explicit, flexible inflation targeting environment. That is our mandate. But as I said earlier, this is a tool to achieve a goal. The goal of a central bank anywhere in the world is how do you combat inflation? And therefore, that is the mandate that we have is defined from the Constitution. It's the protection of your currency in the interest of sustained development and growth. So we have to look at our constitutional mandate. And that is something that a vigorous debate is certainly in the air, and we will be part of that.
Hello, Governor. My name's Nompu Siziba. I'm from SABC TV. Just wanted to ask, just going back to the issue of the ANC Alliance decision to set up a task team, have you had a call yet as to when the engagement is going to begin?
No. What I have had a discussion with the Minister of Finance to say that, obviously we've been in a Monetary Policy Committee meeting yesterday and today. We will be in touch to look at what the process is, who the task team is, what kind of engagement that we would be involved in. And certainly I think that the approach taken is to have a report back by February, and that's very reasonable in terms of that comes up to the budget, that comes up to the work that's being done there, and be ready and available to have that discussion. Certainly the Minister and I have spoken about it. We'll just keep going down that way. I'll come back to you afterwards, Vernon.
Afternoon, Governor. My name is Lynn Lee. I'm from the Mail and Guardian newspaper. I just wanted to ask you, looking at some of the uncertainties that you mentioned when you're talking about Eskom and its impacts on inflation, is the bank at all concerned about, aside from Eskom, other administered prices that will likely impact on inflation? And if so, does the bank think that government should be doing more to curb these administered prices and the impact that they can have on inflation?
I think that the current administered prices on average, because obviously it varies between them, but on average it's about 5%, Brian? Just 5.5%. So I don't think pressure is coming from other administered prices. But Eskom is the outlier, and this has been raised before. It's his very significant pricing effects. Because don't forget, what is planned is not the first time. There's already been increases. So that is of concern. We welcome the fact that the minister responsible, the Treasury, are engaging with Eskom and looking at ways in which the pricing can be considered. We all recognize there has to be a price increase, but it's in a manner that this is done and the impact that it would have on the economy that's important. So we welcome the fact that there is an engagement in that process at this point in time, and we look forward to an outcome that helps the country manage what is a very difficult environment, because you need to have the sustainability of Eskom, but you also need to minimize the impact on the economy. So the fact that these discussions are taking place is welcome. At this point in time, we don't see the other administered prices impacting that their price increases are really moderate, as I said, at about 5.5%. But there's a wider question that I think you're raising, and that is that to deal with an inflation environment or an environment of economic growth or all the challenges that we face of employment, this is a national program. It is not a central bank program in and of itself. We have a task within that. But the way one deals with all of that has to be a national coordinated program with all parts of the economy and society and government playing their role. We have a particular role within that. Yes, sir.
Governor, my name is Tsepo Momai from SABC Radio. I believe that the report on the investigation on the spread between prime and repo is currently with your office. What are the plans with it? Are you going to announce it or make it public?
As far as I'm aware, it is still work in progress. That is being discussed. As I said, I've been here 1 week. Miracles will take a little longer, so I'll get there. But it was not the first thing that I was doing. But it is, in our discussions, that it is work in progress. It is something that's on the table, and we'll certainly look at it. Anyone else? Well, Vernon and then Miriam. Is this our second round effects?
In the statement today, you said the rand has remained a positive factor in the inflation outlook. Are you concerned about the rand's effect on the economy?
Of course. I mean, the question of it, as it's like with everything else, there are pros and cons. The fact that you've got a strong currency at this point in time does ameliorate the inflationary impact, but it has other impacts as well on the economy in many levels, whether it's exports or other factors. So what we're saying there is that at this level, it has a positive effect for a particular aspect, but there are also other effects, and of course we're concerned about it.
Will the Reserve Bank take more action to curb the rand's strength?
I answered that already, didn't I?
Okay, I thought I'd try again. May I ask just one other question?
While you have the floor.
Yes. How did you experience your first MPC meeting? Was it any different to when you left? Is there
I was in the hot chair.
Yeah, sure. Are there any? Can we expect any changes to be made in future? Is there any ideas that you have on the Monetary Policy Committee itself?
I think it's very early for me to share that. Certainly, I think that we have a very strong team, very good inputs, very professional staff, an excellent contribution to discussion, and I felt that it was a very useful way of dealing with the issues. Obviously, we don't only sit down at a Monetary Policy Committee meeting and that's the only time you discuss issues. So there's an ongoing interaction all the time that culminates with the Monetary Policy meeting. And I think I would need a little bit of time to work through all of that and see if there were things that one could look at to suggest, but that is very early days for me. What I can say is that I'm delighted to be working with colleagues who are as professional, as competent as the team that both inputs the Monetary Policy Committee and serves on it. Miriam.
Thank you for the second and third round effects. I have now two questions. One
So
was...
we did not get to the third round, otherwise we might have six there.
Yeah. Well, the first one is I just wanted to follow up, in terms of the bank's mandate. Could there be a case for adding a clause, a specific clause about growth and employment creation to the bank's mandate at this stage, given that these are both issues? Secondly, when do you see the economy returning to growth? What is the bank's view on the third quarter? Are we likely to see an expansion or contraction? And the last question, which is follow-up to Vernon, is there's still an empty place on the MPC, and the previous governor spoke about possibly having an outsider from the bank in that place. What is your thinking on this?
The first one was the clause. The second one was the economy returns. I would not want to preempt this mandate discussion at all. I think it needs to be very carefully considered in terms of what is doable, and I want to go there with the ability to listen to what people have to say, to listen to their concerns and to see in what ways we could address it. Some of these may be mandate issues and some of them may not. So I would not want to preempt that conversation that we're going to have. I want to go there to hear what the concerns are of people and to give it consideration with an open mind, bearing in mind the tasks and the core functions of a central bank. The second question of when does the economy return, as we said in our discussions, the range between the private sector forecasters and the data is so huge. We do think that it is probably declining at a slower pace than in the previous quarter, but whether this is still negative or marginally positive, we can't really tell. We'll find out from stats next week. So we certainly see signs of improvement, and that's why we said that the outlook for 2010 and beyond looks much better. But what the conditions are for third quarter is, at this point in time, just such a wide range, it's very difficult to have any certainty. To add to the membership of the MPC from outside, it's very premature. I'm not sure that an outside member necessarily adds value in I'm sure we would have to have a lottery to find out who was not conflicted and who would actually be able to serve appropriately. But I think there's a process of engagement, and I think that should be very important for me, is what are the kind of interactions you have prior to an MPC meeting. And I'm not talking about a day or two before, and I'm not talking about lobbying. I'm talking about a way in which one listens to different views in the economy and among people, so that when we come to that informs the knowledge that you have about the thinking before you come to a meeting. So I would not necessarily be looking at it in terms of an outside person coming on. But again, there may be ways in which the MPC can improve its working. There was somebody behind. Okay. I'm not sure how many second round effects we're going to have here, because I actually think we are now going into perhaps getting beyond what the purpose of the question of the conference was. I'd like to just ask my colleagues if any of them would like to add anything to any of the questions. If you've got any questions to my colleagues. No, Vernon, hang on a second. Okay. Anyone else? Anything that my colleagues would like to add or to say? Yeah? I think that really is for me to thank you all very much indeed. Thank you for the opportunity to talk to you, and I look forward to regular and constant engagements with you after Monetary Policy Committee meetings. Thank you very much, everyone.